If you're looking for a strategic, actionable business advice, then you've come to the right place. Each week, we provide you with valuable information that'll help you grow your practice profitably. Hi, I'm Debra.
And I'm Sabrina, and welcome to Chiropractic Purpose to Profits. We will be your guides to creating a profitable practice and an abundant lifestyle. Whether you're just starting out or have been in practice for years, we have something for everyone. So make sure to subscribe and turn on the notifications so you never miss an episode. So in this week's episode, we're going to be talking a little bit about the number one expense that everybody is not prepared for. And I'm sure you're thinking to yourself, you've got a ton of guesses that you're thinking, oh, an x-ray machine, a new table, I got to move my office, and all those are great guesses, but wrong. The number one expense that businesses are never ready for every year is taxes. It comes around once a year. Everybody thinks that by April of next year, they'll be good to go. And it catches a lot of businesses off by surprise. And sometimes right after you come off of like the little lull that comes in the later months of the winter. And then you find yourself scrambling to get together enough cash to pay your tax bill that you never thought you would see coming, because how could I possibly owe that much taxes after I've made $0 or I have no money left over? So we're going to talk a little bit today about how Profit First can help you be better prepared and actually prepared for taxes when they come around next year. So I know, Deb, you had a little bit of experience with this year, so why don't you share your story?
Yeah, so Profit First, I would be in that same position. I'd be going along all year and I'd be saying to myself, well, I'll be okay in April because I'm going to save a whole bunch of my money in January and February. So this way, when I have to do the tax payment, I'll have that saved. And, it was always stressful. And many times when I finally got to doing my taxes, I didn't have the money there. And then I had to scramble or maybe cash out investments sooner than I wanted to. And especially this year with everything happening in the economy, the last thing you want to be doing is being forced to cash out on money you might have invested someplace that now is not the best time. Well, in 2022, I sold some property. So I would have had, I will have a very large tax bill due, which I'm not looking forward to. But what's making it less painful this year, although we still hate to pay taxes, but what's making it less painful is the money is in a tax account. It's not in my bank account. It's not in my savings account that I feel like I'm taking my own money and giving it away. It's in an account that's called tax account. And I put that money there all year for my business, but I also put the money from the sale of property in there that I estimated I'd have to pay. So by doing that, when I sit down and actually file the return in April, I won't need to feel as if I'm tapping into money, one, that I might not have had. Maybe I spent it on something I shouldn't have, or I'm giving up my savings, or I got so used to this money being my money when it's not. So whether we like paying taxes or not, it doesn't really matter. We need to. So that tax account, so I'm grateful for Profit First because I'm sitting here going, I got the money, I'm ready to pay it. I'll still hate sending it, but at least it's not going to be stressful. So we want that for you, and we want that for you this year and next year. So now's the time to start, to prepare for next year. Now's the time.
Yeah, and I think that's a great story. And you brought up something that you said in the story, oh, you'll try to just make it up in January and February. And when we were doing the research for the book, one of the really successful chiropractors that we talked to, that was how he went about saving his tax money. He would spend all of his money all year long, and then in January through March, he didn't get paid so that he could pay his taxes. And it's like, it's so much more stressful. And then you're basically also counting on your revenue in January to March to pay taxes on income you earned last year. So, I mean, in an ideal world, every month you would get paid, you would earn exactly the same amount of revenue, but that's a pretty big gamble to run. And I think the way Profit First looks at it is a really great mindset to look at things. You're looking at every dollar that comes into your practice and saying, okay, of this dollar, I'm allocating a percentage to profit. I'm allocating a percentage to owner's comp. I'm allocating a percentage to taxes, and I'm allocating a percentage to owner's or operating expenses. And you're basically saying right from the beginning, these are the purposes of the money. And it's kind of like if you went to buy something, they charge you taxes when you buy it. So why aren't you doing the same thing with your revenue? You know you're going to have to pay income tax on that revenue. So why not take a portion of that right up front and put in an account and save it? And yeah, you can invest that money in safe things throughout the year so that it grows a little bit, like a CD or something that you're bound to not lose the money, but you have it and it's ready for you to send it to the government at the end of the quarter or at the end of the year.
Yeah, I like that advice, Sabrina. So, I mean, for those who, the advantage of staying on to the end of the episode is because that's when we tell you how to do it. So let's talk about, what do I do? What do they have to do to actually be prepared? I mean, at this point for this year, there's really not a lot that they can do, but let's start planning. Let's take action for 2023. So when we get to this point in 2024, so what should they do? What is the Profit First for chiropractic method to not be in that situation?
Yeah, so you would want to open up a separate bank account and start allocating money to your tax account. And the book recommends 15%. It's pretty complicated, the math, to come up with the 15%. 15%, you'll definitely be covered. But now's the time to sit down with your tax accountant as it comes, your taxes come due for 2022, and look at it. How much money did you owe versus how much income did you generate? And from there, you can calculate a percentage that would fit your practice. So you're not oversaving, but also not undersaving. But definitely a safe bet is 15%. And you just allocate it there out of all your revenue when you do your allocations. And then you'll be sure to have the money saved for next year.
So what you're saying, which is a good point, they're going to be talking to their tax accountants now anyway, right? You're going to get ready to do your tax return. Take an extra 30 minutes and sit down with them and say, I need to understand this a little better. So I made X amount of money this year, and I had to pay X amount in taxes. Now, when you're filing your taxes, it's, you want to look at how much. You want your tax accountant to tell you how much of the taxes you're paying are truly from your practice revenue. Because maybe you had other things that impacted your taxes on a personal level. Maybe you have other businesses that you're involved in. We're looking at the practice. So of your practice, what percentage of the tax is represented from your practice income? Your tax accountant should be able to tell you that. So I think it's a good thing to do. Great idea, Sabrina.
Mm-hmm. Yeah, and then that'll allow you to be prepared next year. So instead of trying to scrape together money and pay off taxes that are from really years past, you'll have the money there. And like we said, it still stinks to send the government your tax money. Nobody really wants to do it. That's kind of one of the benefits of being a W-2 employee. They kind of take it and then give it to you afterwards. But it's an unfortunate fact that we have to pay for taxes. But this at least allows you to be prepared. It gives you the benefit, gives you the stability. It creates that feeling of comfort where you're protected and you don't have to worry when it comes time to the end of the year that you're going to be paying a bill you can't afford. So I think that's all that we have for this week. Another great episode. So thank you for joining us, and be sure to subscribe and click the notification below so that you never miss an episode. And we'll see you next week.